Sarman.
I won't take credit for that. That happened. Awesome. Okay, we're here. Well, thank you everyone for attending the 11th episode of our webcast series, Affluence to Wealth. My name is Sarman. I will be your co-host for today, along with my business partner, Ara, I point to my left. We're normally in the same room, but today we're not. And our very special guest, Bill Dewson. How's it going, guys?
Great. Hi, everybody.
Hello.
Awesome. That's great. So Bill Dewson is the founding partner of Dewson Architects, and they are an award-winning architectural firm that design, in my opinion, and the awards speak for themselves, very beautiful environmental and sustainable designs, whether it's in residential real estate or cottages, or in boutique commercial places. So we wanted to bring Bill here today because we are looking and embarking on a very exciting new opportunity, and that's called the missing middle. And that is the topic for today. Bill will most certainly talk more about the missing middle, what that is, and the new regulations that have been released in Toronto to help alleviate the housing crisis. Because as some of you may or may not know, demand most definitely surpasses the supply. So with that, please do feel free to ask any questions. If this is your first time, we like to keep it first time on our webcast. We like to keep it very casual. Hopefully we don't cut too many people off between Ara and Bill, but we do like to interject and make it more casual rather than more of a monologue. So feel free to ask any questions in the chat, and we'll be...
We do have a question. Maybe it was during the downtime. Can you please explain P-Gate, how it's structured from an investor's point of view?
That was not a planted question, but I was going to say
great.
we've got a lot of people on this call. So Ara, why don't you just give a brief background?
So we're an exempt market dealer, which means we're regulated by the Securities Commission, which is great for an investor. There's a lot of investor protection. So unlike a fund where we take money commitments into a fund, the fund manager decides what to invest in. We work on a deal-by-deal basis. So the investors log on our platform, which is something we've built, proprietary. They see the deals. We don't have dozens of deals because we're very, very selective. They see a deal they like. They show that they sign an NDA. Everything's online, and they show a commitment to it. Usually, our minimums are $50,000 to $100,000, and they could change their mind until close. At that point, we've had an LOI signed with a target company. Like Bill is a target of ours. Now he's our partner, which we invested in. We went through the same process. And typically we've been oversubscribed so far, so it's almost like first come, first serve. But as we get more deals, hopefully everybody will be happy. So once we invest, we manage the portfolio. We have the Dewson was brought to us by one of our deal partners, and also LP Michael Smith, who's on the call. He's the great relationship, and that's what we really like. So that's how we're scaling up, is people who have relationships with target companies and they bring us a deal. And Michael's involved in operating the business. So we take a high level, more of a governance role, but we try to add value. And the platform is used to share information. And the best thing about the platform is it has a secondary market. So you're not stuck on that transaction. After a 6-month hold, that's an Ontario Securities Commission rule, then you're allowed to post the shares for sale. And it goes to the internal current buyers or shareholders. And if they commit, then you have a transaction. If they don't, it goes to our wider audience. So that's really, really brief. We're happy to have a one-on-one call with you if you want more info.
Yeah, one exciting part is the way in terms of how it's structured from an investor point of view is each investor invests on a deal-by-deal basis versus investing into a fund, which is structured because we're an EMD and we're allowed to create a special purpose vehicle, which then allows us to, or the investors, to take advantage of the lifetime capital gains exemption which we have other webcasts to discuss that in detail, which is up to just north of $900,000, and it's cumulative and it's lifetime. So there are certainly we've worked very hard to create this structure, investment structure, with certain benefits. But today's topic is definitely the missing middle. So I'm going to let Bill talk a little bit about Dewson before we jump into the missing middle. And this is a gorgeous design that was it this month or last week that won an award, Bill?
Yeah, this is our Eugenia Lake House. This is a project, single family residence with a gymnasium, accessory building on Lake Eugenia up near Flesherton, Owen Sound, that just recently won a gold award from the International Design and Architecture Forum.
Congratulations. And
Well,
that was
thank you
just
very
really
much.
recent.
Yeah,
2 weeks
and the
ago.
gold, actually, we won 3 awards. The gold was for residential architecture off-grid. This building is, as soon as we place the solar panels, we're doing analysis of how many solar panel array we have to do on the roof to get it to net zero. That means this building consumes an equal amount of energy that it produces. There's no fossil fuels, there's no natural gas, it's all electric. And if we sort of cover the roof with about 60% of the roof with solar panels, we will be net zero. So that's
And
very
it's
exciting.
prepared for that, right? The roof is ready to go for that.
Yep, it's a standing
Yeah.
seam roof that's ready to take the solar panel installation. We're just crunching the numbers so we don't over build the solar array.
Beautiful.
And what we also won a silver award for residential architecture, which is based solely on the aesthetic, and third award for interior design, a silver award for this same building. So we won 3 awards from the International Design Awards Forum.
And so this is you would say represent a lot of your designs. I mean, it looks very sustainable, environmentally friendly, gorgeous. And this is what you provide to all your clients, or is this a one-off?
This is what we provide to all of our clients. This is based on passive house assembly strategies. There's a lot of LEED certification aspects to this project. It is also a proof that they can be very elegant, beautiful buildings. Highly engineered buildings are also beautifully aesthetic buildings.
And one thing I've learned from Bill over the years, it's not just it's sustainable, that's amazing, but also it's a lot nicer place to live. So he'll talk about the envelope quite a bit. So it makes it such a more comfortable and healthier home.
Yeah,
So that's the focus. Yeah.
If I could touch on that. Yeah, we're not doing these sustainable buildings to save the planet. We're doing it to save our clients money. By building a robust envelope, the walls, roof, and so on of a building, the envelope of the building, if we build a very robust building, the building lasts longer. It has durability. It lasts for a century versus a couple of decades. Then it becomes an appreciating asset, and we push out the maintenance period. So now you're not maintaining. In this particular building, there's a metal siding to it. This doesn't have to be repainted every 5 years. It's going to last for 20 years. So there's maintenance savings, there's energy savings, and there's reconstruction savings, plus an appreciating asset as the built real estate. This is why we are doing it for the client.
Yeah, and the resale is it. Yeah, we are trying to save the planet, but that's the secondary. We are
It
saving the
saves the
planet.
planet.
Yes, we're saving the planet.
We say it, but that's residual. It's about saving the client money.
Yeah.
And yeah, So
Great. So let me marry. So we got a little background about what Bill and the team do at Dewson Architects, and as Aras mentioned, we have and had the fortunate ability to invest to take a minority stake in Dewson Architects and work very closely with them over the past 2 years. So Ara, why don't you talk a little bit about PE Gate's interest in the opportunity of the recent regulations that were released in the middle market?
Okay, so as some of you know, we don't typically focus on real estate, so we like cash flowing businesses. However, this seems because of the new regulation, because of the relationship we have with Dewson, because of our actually investor interest, we do have an investor who is committing 25% to these projects, and someone close to him is actually from DuPont is willing to be involved as the GC, and there's some. It's going to be very opportunistic, and we see this as the first mover advantage here because a lot of the developers are not targeting these smaller developments, and I think we have an edge with this group we've put together. And we are going to be targeting north of 15% IRR returns. So it should be healthy returns. That's without assuming a capital appreciation. So we're in it for the money at the end of the day, and we see this as opportunistic.
And it works very well, right? Because we're working very closely with Bill. We have an anchor investor. We've got a contractor. We also have a friend of mine, Kamiar, who is a real estate investor, a realtor as well. So, all the stars are aligned. There's new regulations, so we're very opportunistic, and that's why we're all here today. Sorry, Bill.
Yeah, and
should
if
we
you have
talk about
any,
the missing middle? Should we
Yes.
just explain what the missing middle is?
what
Exactly.
is the missing
So
middle?
why don't you tell us a little bit more about what the missing middle is, Bill?
Okay, a very specific definition, or the first definition of the missing middle is regards to a building typology, a residential building typology. The missing middle is all of those residential buildings that fit between a single family home and a 6-story mid-rise multi-unit residential building. So that's everything from a duplex right up to a 5-story multi-unit apartment building. That's duplex, triplex, fourplex, and that's the interesting part, the fourplex, and we'll come back to that in a minute. Laneway suites, garden suites, townhouses, and 4- and 5-story apartment buildings. That's the missing middle building typology throughout the GTA, throughout Ontario, and throughout Canada, and quite frankly, all through North America. That is what is defined as the missing middle.
And historically, before this change in regulation, if you have a single family plot, such as I think we're going to show you 40 by 120 plot, we're talking in feet, which is typical in Toronto, 40 to 60 foot lots. You can only build a single family unit on that plot, correct? And then if you
Correct.
talk about the change in regulation.
Correct. Bill C-23, the provincial government, it's an act that came into force last year, 2023, and it's guided municipalities to increase the density of their zoning bylaws. And how that affects specifically Toronto. And when I talk about Toronto, I talk about the GTA, the 6 boroughs that make up the GTA. Every residentially zoned lot, that's an R-zoned lot property, of which there's hundreds of thousands in the GTA, now allows for fourplex plus 1 garden suite or laneway house on a single family, on a single lot. So that means lots that used to have bungalows, a single family bungalow, and independent developers would tear down a bungalow and build maybe a duplex or something like that. Now we can build a fourplex plus 1 garden suite, 5-unit development on one single R property. That's the change in the regulate. That's what's pushed.
And that's the opportunity. Yeah.
That's the opportunity. And it's a very interesting sweet spot because that 5 units development kicks in all sorts of CMHC financing opportunities.
So great that you raised that. We do have a comment. I thought sustainable architecture was expensive. Can you link what is the benefit of having some sustainability? So we're not proposing to have net zero buildings here for this investment opportunity.
That's correct.
But
These
talk to us about the
that's
benefits
right.
of sustainability.
Yeah, there's levels of sustainability, right? There's viable sustainability. One can go overboard with the sustainability. That's where it gets expensive. There's a sweet spot of how many sustainable attributes you put into a particular building to raise its value, to get the biggest kick out of sustainable features. It all comes down to the envelope. Briefly, if we're creating a construction project, we're starting a new construction project, we got to go through all the approvals. We have to bring all the trades. We have to build it. It's about a 2-year process to go from beginning to end, maybe 18 months to 2-year process to build these. As of right, it gets a little shorter. If you create an envelope that has 3 basics, air tightness, proper insulation, and no thermal breaks, you can create a sustainable building that will reduce your operating costs significantly. This is the heating and cooling costs. It also will reduce your maintenance costs because it's a robust envelope that is durable. And finally, it there's where you put your sustainability. We don't worry about doing geothermal or all sorts of other extracurricular. Don't give you a real hit in cost.
And then with CMHC, which is the Canadian
Mortgage and Housing Corporation.
Mortgage Corp. Thank you. And we do have Robert McDonald. He's a commercial mortgage broker on the line as well. If we have any specific questions for that, likes it, and there's a point system, from what I understand, where you get certain beneficial rates, and as well as a longer amortization period if the building meets some sustainable criteria. And what other criteria?
Yeah, there's three thresholds. There's accessibility, affordability, and sustainability. And they sort of determined as energy efficiency on the sustainability side. So if we step back, accessibility, that means that it is accessible to handicap and wheelchair. So there's ramps and various turning radiuses, so that there needs to be a certain percentage of the units in the project that you have to include in your 5-unit development that is accessible. Secondly, there is affordable. It has to be there's affordability thresholds. So one of the certain percentage of the units have to be affordable on a rental basis. And then finally, sustainability. You need to be energy efficient. And where we can meet those thresholds is basically in the envelope of the building, and hearkening back to what I'm talking about before, air tightness, insulation, and breaking thermal bridges. If you create that in that envelope, you can meet the sustainability targets of the CMHC.
So there are financial benefits of that, and you don't have to go, like you said, all the way fully
so Bill,
sustainable.
why don't you, I know you've created this envelope, this rendering. Why don't you talk a little bit more about this and how it's really playing to the regulations and CMHC's criteria?
Okay, so this is a 4-plex on a 40-foot wide lot by 130-foot deep standard property you find all through the GTA. The fourplex is the larger building in front, the 4 stories. It's 1, 2, 3, 4 levels. Each level is a standalone unit, apartment unit of 2 plus 1 bedrooms, anywhere from 1,200 to 1,400 square feet on each one of these units. That is a sweet spot in terms of the demographic of families and people looking for 2 and 2.5, 3-bedroom apartments. That's a sweet spot for the size. It also is showing a garden suite at the rear, which is a further 1,400 square foot above grade dwelling unit. So there's your 5 units, 4 in the larger building and 1 in the garden suite. The construction and the form of these buildings, these are maximizing the bylaw allowances, the allowance for length of building, width of building, minimum side yards, maximum height. These are units that have 9-foot ceilings. You'll notice that we have an exterior stairway on the 3rd level. You can come up. There's a common stairway to get into each one of the units, and each one of the units can then get up on top of the roof.
And this is as of right, and
this is
please
as of
explain
right.
what as of right means.
That's a great. I'm glad you asked. As of right is when you submit a building for approvals process. If you conform to all of the as of right bylaws, that means it goes directly to building permit. You don't need to go through zoning amendments or committee of adjustments. Much faster.
So
it reduces.
So when the benefit to us, when we put a proposal together for investment, we know we don't have to go to committee of adjustments for that design, which is great. So there's less uncertainty. We have some questions, lots actually. I'm going to go with the parking spots question mark. This doesn't have covered parking, but it does allow for outdoor parking, which will be cumbersome because there's no, you can't really, you got to get your neighbors to remove the car, I guess. Bill, how do you get around that issue?
Yeah, if we can pull out a little bit, reverse it back to where we can see the driveway. Yeah, right there. Stop there. Okay. Bylaws require that the front yard be 50% softscaping. So as you can see in this, the front yard would be to the right of the screen, and we have 2 cars parked, one is side by side. And then we have the driveway going back to the laneway to give access, and you can see that the laneway, there's parking at the laneway. In order to get that laneway parking out, somebody has to move their car. And there is plenty of parking on site for the 5 units, but it does require jockeying. That's just a simple fact of living in a city.
Toronto, yeah.
So right, you're not going to get around that issue.
Yeah,
but
and it's a lot of residential, and as you get closer to downtown Toronto, there's very little parking on your property. There's a lot of road parking, so that the parking is an issue. And I believe, according to Cam, there's a property at Yonge and York Mills, big tower going up. They're selling parking at $150,000. Yeah. So
if you're so I just like to, if I may, or just break in, is that you have to move the cars, but you have on-site parking, and you've got on-site parking.
But if we had a larger plot, that may change. So right now, this is the smaller plot we're targeting, 40-foot lot.
And Bill, after in our discussions, you said that you could customize if you have a narrower lot. This is, I believe, 40. If you have narrower, then you would remove the parking. So this isn't a set model. You could really grow or shrink based on the lot size. But what would you say is the minimum width a lot needs to be? Remove the parking, like just
the minimum would be 30-foot wide lot. There you would lose the side yard parking. Okay, but that's the minimum for to hit the sweet spot on a 2-bedroom unit to have say 1,000 square feet for a 2-bedroom unit. That's the minimum, 30 foot. And then the maximum is the sweet spot, I believe, is I think is 40 feet, 50 feet, and 60 feet. There aren't as many 50 and 60-foot lots throughout the city. That's why I say the sweet spot is the 40, but 50 and 60, they then allow larger, and these would be more of a higher income rental property. Now you're going to get into 1,800 square foot units that would be 3-bedroom plus den, and this could be to empty
And you
nesters.
mentioned, and it doesn't, and the rental is something we're looking at and we're modeling. It could be, so this could be for someone on the on this webcast that is has a property and is looking to develop it. So it's not just for investment opportunity for us, but Bill can definitely and the entire team can support in your own development. It could be something that you want to build for your children, live at the top floor, and then your children can or family members can live with you. So that's the first time opportunity. Lots of questions. Can I read one of the questions,
Yeah.
Bill?
Yes.
Have regulations updated around multiple staircases for 2+ unit structures? I know in many European countries allow one staircase, which opens up floor plans for small footprint structures up to 6-floor structures quite a bit.
So this is a 3-story dwelling. So with that, we have in this particular case, it's a one stairwell common to provide for each unit.
And that stairwell is on the outside,
It's inside the building.
inside the building, but outside of each unit.
It's outside of each unit. Right. It's interior of the building, but it's outside of each unit. So everybody enters their unit off a common stairwell.
Excellent. Another question, how many garbage, recycling, and green bins required for 5 units, and where are they stored? Thank you, Dennis.
That's a good question. There would be it's flexible. Multi-unit, you can there could be one blue, green, and gray box for each unit of a smaller size, or they can be grouped into larger sizes and have less units. Those boxes would be they would be stored in the rear in a common shed. See where the car, point your cursor to the car that's parked by the garden shed, and in front of that car in the shadow, we would probably do a recycling structure, garbage and recycling structure there, so that everybody could have access to it, and then in garbage day, it all comes out down the lane. So there's flexibility in there.
And there's so much to work out as well. So this is absolutely new. We're not aware of anyone who has built such a unit yet.
That's why I think it's really interesting. Like the city has kind of created this asset class of the missing middle, right? We have single family, and of course, with variances, you can create duplexes, triplexes, quadplexes. But this is now we're going to see an influx of a lot of supply with this particular missing middle asset class. So there's not many comparables, and it's going to be. I find it exciting. I find it fun to kind of be at the forefront of this market, along with probably a lot of you who are on the call as well.
And there's other questions. In general, this is not set in stone, this design. This is just to give you an idea that it can be done on a 40-foot lot. There's a question about e-cars getting more popular. Thanks, Bram. In cities, how would charging be handled? Most people charge in their garage now.
Yeah, Charging units can also be
They can be
tied to
outdoor,
the
right?
exterior. They can be outdoor, exterior. I myself have a Tesla, and I don't have a garage, and my charging unit is on the exterior of my wall and the driveway, and they could be one attached to the garden suite. They can be and also attached through the length of that drive.
Yeah,
Nice.
what I see happening here is, and this is just a thought I had. I mean, um, you could have someone paying a premium parking spot where this is their designated spot. I myself also have a Tesla, so it might be difficult to jockey and have the charging spot right there. So maybe the person who has the EV pays a premium for that parking spot to have the designated spot there with the EV. So they'd run a
The
high
easy
end.
access.
Yeah, exactly.
Great point.
So
Yeah.
yes, ways around it.
Another
Question
question.
by Mark. Is there a condo board or is the landlord the only governing body for all the units? So it's a good question. It really matters on how it's structured. If it's strata titled and it's condominiumized and each unit is sold off, then you will need to have a condo board. If it's one landlord, then you're dealing with one landlord or property manager.
So yeah, and Mark's a realtor as well. Hey, Mark. And great question. So that's something we're modeling. It seems so far that selling these units is more profitable versus renting. But we're still modeling it. They are going to be premium units in great neighborhoods. And they are going to have the advantage of not being a condo, like a high-rise tower, but being probably more affordable than per square foot than a high-rise tower. So we're still modeling what's best. We don't mind either. If the rental makes sense, we'll rent it and then sell it, condo it later, and then sell it or sell it right away.
Yeah. We've got a
But at
question
this
here.
point, yeah.
Oh, sorry, go for it, Ara.
No, go ahead. Sorry.
Yeah, I remember Bill, myself and Ara, we were chatting about this with Cam as well, metered and how each unit will be metered. So the question is, how do you deal with metered utilities and maintenance of common area? So Bill, do you want to talk a little bit about that?
Well, if it's a rental unit, it would be 5 separate meters. We probably would need minimum of 4, maybe even 600 amp service to the whole development. Yeah. So on a rental basis, or if it was a condominium, there would be 5 separate meters, each one for
Perfect.
each dwelling unit.
Another question from Mark, is the fourplex built in steel and concrete and the garden dwelling in wood framing?
No, it's all wood frame.
It's all wood framing. And I could read Dennis's mind. Would you prefab? He hasn't written the question, but would you prefab any of this?
I think you would do get a number of these up and running, doing it with traditional stick framing. But then I would soon be looking at doing a prefab in mass timber, where it can be assembled. These units are prefabricated modular units that are a certain width on a certain lot and a certain length, and boom, 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 you could get an assembly line for the structure. So in terms of prefab, you could move to that. That also has the definite advantage of you can expose mass timber on the interior, so you can reduce the drywall content and increase the beautiful aesthetic of natural wood on the interior. That could become a kind of a luxury version of this.
Agreed, and it depends on the neighborhood. So we're
Yes.
not, yeah, and then also Ken, who's on from DuPont, he's a builder and he targets certain neighborhoods, medium to higher end, and he understands those neighborhoods and what sells well. So it's not a cookie cutter approach at all, and it has to be tailored to the neighborhood. So
I just
mass
also
timber
want
may
to
work.
point out that there's the roof is a terrace itself that everybody has access to.
I was just thinking that, yeah. So any regulations around that, the terrace, or is it just open?
The bylaws, they're allowed. You can see that there's the bylaw allows a 4 square meter deck, and then the rest can be green roof, or it can be just a standard roof, uh, built up roof, or it could be covered with solar panels.
And would we consider, just like Sarman mentioned on the parking, one unit gets priority to the parking? Would we consider the rooftop is sold with the top unit potentially
Yeah.
versus a common
Yep.
space? So
Yep. Yep. And it can also be flexible in that you could break this up. It could be 3 total units. Maybe the upper unit is the upper 2 floors. The lower unit is the lower 2 floors. The lower 2 floors get the backyard, front yard. The upper 2 floors get the roof terrace. There's lots. It doesn't have to be a fourplex. It could be a duplex. It could be a triplex. It could be all sorts of things.
especially if it's a larger plot, we're talking about it being a duplex, where you have some very sizable home, split into 2 units. One question about elevator: is it feasible in this design?
Yes and no. Yes, in that an elevator can be put in, but the elevators do take space, so you do have to sacrifice other spatial uses. For instance, a secondary or tertiary bathroom. But definitely residential elevators can be installed into these units. So let's say if you're doing this development yourself and you want to live on the upper floor and rent out the other 3 yourself, we can put in an elevator to activate to your unit and customize these units.
I've got a
Excellent.
question here. I think Ara's probably gonna answer this one. Is an
I
investor
love
investing in Bill's company or an individual project managed by Bill? So the benefit is we're on a deal by deal basis, so you're investing on each deal particularly, but Ara, I'll let you
Yeah,
expand on that.
so the answer is it'll be a new project posted. So with Bill's company, it's already invested, and we do have a good investment group. However, we are targeting other architectural firms, so there could be an opportunity within Bill's company if the internal shareholders don't take. They have a first right of refusal. But these real estate projects would be completely separate from a risk point of view. The only disadvantage of these real estate investments is that it doesn't qualify for the lifetime capital gains exemption, and we would structure it slightly different. Right now, we set up corps issuing shares to investors. In this case, it is more tax advantageous to do a limited partnership, where we will incur losses as you build, and those losses flow through to the investor, either their corp or individually. So for tax reasons, we would set this up as likely as a partnership, limited partnership, limiting the liability to each investor. But we'll have a one-on-one, David. We'll reach out to you and explain this in more detail.
Awesome. So next question is, do you have any modeling around expected build costs, expected rents, returns? Obviously, this would differ by neighborhood. It certainly would, and we have discussed that, right? So if you're building somewhere in a lower income area or somewhere, let's say like Rosedale, Forest Hill, of course, our price per square foot is going to differ. So we are still working through different scenarios and where is most profitable.
Yeah, so we do have that modeling. I think we'll reserve that for another episode or a more private one. If you do have interest in this, please do reach out. So we'll probably make it the next one a more private webcast as we share more information. especially on the financial side. So, but we, buying the plot at a reasonable price, or, buying cheap is extremely important. And also managing your costs, your build costs, is obviously extremely important. And then we're modeling the rent versus the sale. But if you do have interest, please reach out to us.
And how do they reach out?
You just email. I think we'll put that in the chat. If we could we'll put our emails there. And if you're onboarded,
Or then, or pgate.com, you can message us
Yeah.
there. Great. So it's 10:49 here in Toronto. Are there any questions? Normally we leave some time for questions at the end to be verbally asked, but we're getting quite a lot in the Q&A. One other question by David. Please explain how you arrive at 15% projected IRR. I'll let you take that.
So that's our target. We'll work backwards to achieve that. And if the project doesn't achieve it, then we will obviously not go through with it. There's a lot of factors at play: the borrowing cost, whether we go with CMHC or not, and that will typically be for a rental unit at a lower interest rate, at a longer amortization rate, or we actually split the units, condo it, and individually sell. Right now, that's looking like the most profitable. So that's why we want to just work through the models a bit more. So based on our modeling so far, splitting the units and selling would yield over 15%. We don't know. Right now, it is an opportunistic time to buy these plots, right? There's not a lot of real estate activity. And you could pick some of these plots fairly lower than definitely 6 months ago.
And we think this is a great time, right? We saw Bank of Canada come out yesterday holding rates at 5% and potentially signaling that will be the top. So we think that now is a great opportunity with all the dry powder on the side to pick up a lot at a decent price and start designing and building in hopes to strata title condominiumize it in a few years' time, when rates hopefully will be lower and there will be a lot more demand.
And I'd like to add even, and all the regulatory agencies are all greasing the wheels to get buildings such as this built. So the approval process is going to be as smooth as approval processes can be.
And we were talking about this. Is this specific to Toronto GTA, or where are we focused?
Currently, it's allowed in the entire GTA. So the 6 original boroughs that make up the GTA, but very soon, neighboring borough or neighboring cities such as Mississauga, Brampton, Ajax, Whitby, all of these areas will be following suit. They're watching Toronto very closely, how we're going to roll out these types of developments, and in terms of the approvals processes, all of these peripheral building departments and planning departments are going to be instituting very similar bylaws allowing this type of development. Missing middle.
Another question: how many projects do you want to do in the future? So we've discussed this. We will likely stagger it as we purchase the first plot. We will look at purchasing the second plot within the first 6 months. So we don't want this to be a one-off, that's for sure. And especially as we build experience. As with our other deals, the first investors that come in on the first investment will have first right of refusal on the future. So they will probably be taking a bit more risk because this is uncharted territory. However, they get the benefit of having the first right of refusal. We make sure, do our best. We got to be careful with the wording here. That we're going to be ultra careful on the first project to make sure it's profitable. that's how we tend to move. But so we are currently looking at plots. If there are any plots that you come across, please let us know as well.
Great. We're close to ending. If there's any, what's the minimum buy on any projects? So I would say that, generally we like to keep our minimums at a $50,000 ticket. If we're, so it really depends on the project. There's Angel List that really focuses on fractional ownership where each person puts 10, 15, $20 and they end up with hundreds of investors. So our goal is to keep it within a smaller maximum 10, 15 investor base. So you have to work backwards to see how large the project is. And we work there to set a minimum, but it could be anywhere from north of 100,000.
Yeah, I would say 50 probably at the lower end, but who knows? If there's a lot of individual interest at 50, then we might just do it at 50. And this is in Canadian dollars as well for our international investors.
We got a question from Summer, who's dialed in from Dubai. Hello, Summer. What timeline should we expect for this project from start to finish? It's a good question. Bill, do you want to kick that off?
From acquisition of the property to handing over the keys, 18 months.
And how can you walk us through the 18 months? Is it
I would give that would be probably the minimum. 18 months would give us 6 months for approvals and 12 months for construction. 12 months on construction would probably be a little bit light on this. I would sort of think of a window of 12 to 15 months, maybe 15 months on the outside. And the 6 months upfront approval cost, that's taking you from purchasing the property to acquiring all of the building permits. I think that's quite generous for an as of right building. So just to summarize, I would say 18 to 21 months.
Yeah. Okay, great. We've got one more question. What will the condo agreement look like? Any lawyers here? We are actually speaking with a real estate lawyer to hash that out. So we don't have the specifics of what it would look like. But it's, there's boilerplate standard condo agreements. Given this is a smaller build, I don't see it being overly long and detailed, but it would be the standard condo bylaws that the government requires. All right, do you want to take the next one? Are you planning on renting properties or flipping?
Yeah, I think we covered it. Whatever makes sense right now. Selling the units seems like makes more sense. And so we don't know yet. It depends on the location, the size, and what kind of financing we're going to get for it.
I see a raised hand, Andrew. I don't know if Andrew, you have a question, or was that just a hand left open?
Maybe I think it's from the start of the
okay, maybe
the webcast.
Maybe a high five. Okay,
excellent.
Are there any other questions? It does not. Please feel free to throw in there. But yeah, no, thank you everyone for dialing in. Thank you to Bill for your expertise and showing some of your designs, award-winning designs, and the rendering on our projects that we're looking to create. And thank you to everyone who dialed in. As Ara mentioned, if you are interested in getting in touch with us, please do so. You can go to pgate.com or email us. Or please feel free to check out Dewson's website, Dewson Architects. You feel free to reach out to Bill. And Hussein, you slipped in a question right at the end here. Not sure if this was covered. So financing giving during the build.
Yeah, we would look at construction finance. So we'd look at buying the plot and then getting construction finance and then refinancing after it's complete.
Right. Right. Okay, great. Well, the beauty is that this call is recorded and we will be posting it on our website in the next few days. So thank you again, everyone, for dialing in. And yeah, thank you again, Bill. And anyone, please do feel free to reach out. Looking forward to it.
All right.
Okay.
Bye,
Thank
everyone.
you.
Bye.